Hello, everyone. Today is Friday, June 30th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 688, where we break down the most important trends, price action, and noteworthy moves across financial markets. And we're going to jump right into it today with this week's top headlines, some of the stories we're going to be discussing throughout this episode. Top of the list here are stocks coming back. So we finally got that brief pause last week. We finally saw a down week for indices, and that's all we got. We got 1 week. We didn't get any follow through. We didn't get further weakness. We didn't see sellers continue to accelerate lower. We saw the exact opposite take place. We saw the bid return back to this market, and we saw a nice big push up across the indices. We're going to talk more about this as we get into the charts. Dow Jones. So Dow Jones suddenly looking fairly actionable, kind of poised for a breakout. We're going to look at those charts in just a minute as well. We are approaching sort of the seasonally strong period in markets. So I think the first couple of weeks in July tend to be some of the best performance, just going back over the 100 years of data and looking at stock market returns. This is a very strong bullish period that we are entering in right now. Of course, we do have a holiday shortened week. We got the 4th of July holiday next week. So we do have probably a lighter volume and just a kind of full force kind of summer trading coming up this week. Energy stocks came alive this week. We're going to look at a handful of those, and we really are just finding it more difficult to really find bears out there that are trying to hang their hat on throughout this melt up that we've been experiencing. And we're going to look at some of that evidence in just a minute as well. So all of this coming up in just a second here. Stay tuned. All right, here we go into the charts. We are using TC2000, Warden TC2000. For those of you who are users of the platform or might consider using it, we do have a lot of these screens, stock scans, layouts, indicators built for the platform. We have lots of tutorials and guides for it. So for you TC2000 users out there, check out our website for a lot more on getting the most out of this platform. So let's kick things off here with our overview of the indices at large. If we follow my mouse here, you can see on the week we had green across the board. 2 to 3% up for all of the indices. S&P 500 up 2.3%, Nasdaq up 1.9%. The Russell 2000 came really scorching back here. So it had a tough week last week, but it reclaimed all of it 3.66% higher. And world stocks recovering a little bit as well. If we take a look at stock market volatility, generally speaking, pretty much flat here. So Nasdaq vol unwound just a smidge. It's under 20 for the VXN. And then for S&P, the VIX, you can see 13.26, just a little bit downside. I think I flipped that. So Nasdaq vol was up 19 basis points and 18 bips down for the VIX. If we take a look at just kind of the landscape, the trading for this week, this is a 1 week chart on all of these indices here. And so you can see the Russell 2000 just started totally in the bottom left here and just rallied all week long. We saw a little bit of weakness early on in the Nasdaq, same thing for the S&P, and then it just got its act together as the week went on. So that was really the trading landscape there. Everything very, very positive. And if we take it down to the sector view here, you can see on the week, top of the list here was real estate, 5.1%, followed closely by energy and materials, all up 4 to 5%. Every single sector was in the green this week, but on the downside, we had staples, healthcare, and utilities. It's exactly what you want to see basically in a risk-on sort of market. You want to see the more defensive tone kind of lagging a little bit. You want to see a more risk-on tone for, you know, the just the more higher beta names and sectors of the market, more cyclical areas of the market. And that's exactly what we got here. Technology kind of in the middle of the pack this week. But notice also 1 month numbers here, everything nice and sharply green here across the board. Now, if we take a look at those trends of our sectors here, so this is one of our custom indicators for TC2000. This is our smart trend filters indicator. And you can see that you're starting to get a good amount of separation here in some of these dots. So for instance, the XLI here that shows pickup in momentum. Same thing for materials, little pickup in momentum. Same thing for real estate. You can see things are starting to get just a little bit aggressive there, momentum building to the upside. But generally speaking here, we saw energy starting to flip up. So we got a kind of a fresh new buy signal there. Trend trying to turn up here on Friday for energy. Biotech still kind of in a slump of its own here. Bottom left still printing kind of a bear signal here for IBB. Healthcare kind of in the middle of the road. Utilities bearish still, and staples kind of neutral right now, trying to base out sideways. Financials also trying to turn back up. So a decent amount of change in terms of some of the groups here that are starting to participate a bit more in this market rally. So speaking of participation, if we take a look at market breadth underneath the hood, remember, just a couple of weeks back down here on this chart, when we're tracking the number of stocks hitting 52-week highs and lows, we were worried for a minute here that we were starting to get that uptick in stocks hitting 52-week lows, but that quickly kind of dried up, flipped back up to a nice positive ratio. You can see last week we got a little bit of a spike here on that Friday sell-off here last week when we talked about the market taking a breather for the first time in many weeks. And now you can see this week we just came right back with some good thrust back up to the upside. And again, if we take a look at some other metrics here of breadth, if we look at the NYSE stocks over the 200 period SMA, you can see breaking out to new highs, but almost 50-60% of stocks are now above their 200 SMA. Same thing for the 50 SMA. You can see kind of reaching up here as well. So lots of kind of positive undertones happening behind the scenes here for stocks, generally speaking. Now, shout out to IBD. They are a sponsor of this show. They make the show possible. You can find a link in the description to get access to their digital subscription. I pulled the top 10 IBD 50 stocks right now and just tracked their performance. So another kind of measure of growth appetite from their list here, and sort of a bit of a measure of breadth. And you can see Carnival, which was quite the story and quite the month for Carnival. CCL here, ticker up 68% in this month. But really, if you look at these IBD tickers, you can see that basically, we do have some strong double-digit gains. So June was a hell of a month here for lots of stocks, frankly, to close out the first half of the year. But this week, we still posted some strong gains across the board here, and you can get more of IBD's 50 list if you subscribe to their digital subscription link in the description of this video. Now, if we take it over to commodities here, you can see on the week it was fairly mixed, but constructive for certainly oil, up 2%. It was kind of the top of the list here. Silver also rebounding a bit, 1.5% up. You can see the dollar index was up slightly this week. It gave some back on Friday. I mean, it was up sharper on that Wednesday, Thursday, and then really kind of deflated a bit to the end of the week. Gold was flat, but certainly turned around and is trying to put in a little bit of a bottom. We'll take a look at that chart later. Natural gas was down a bit, and DBA rolling over a bit. So that's that agriculture ETF. Starting to get a little more pressure there, seeing a deeper pullback than it's seen in recent times. Now, treasury yields, if we take a look here, you can see everything was up across the maturity cycle here. And, this was getting concerning here. Certainly had a very kind of ominous look on Thursday. We were kind of getting breakouts in yields across really, 5, 10, 30 year, right across everything. And the 10-year yield, backed off a little bit, but, certainly looks jumpy, certainly looks like maybe it's making a march back up to 4%. That to me would start to stall out this rally if we do get yields consistently pushing higher here. But you can see again with some of the action we saw on Friday, seems just like a good amount of volatility here, pricing out, of course, market looking at a lot of inflation expectations and certainly the economy and trying to, stay in front of what the Fed is saying and doing. So TBD on kind of how these bigger consolidations shake out. But you can see just generally speaking here, for the last handful of months, we are still going kind of sideways in a range for treasury yields moving in that sideways range. So let's look at some price action now. Let's take a look at the S&P 500. Here is the weekly chart. And again, you can see just a beautiful bullish continuation week here. We had that pause last week. and inside week for the S&P 500, and that was it. That was all we got. No follow through. If you recall, our analysis, the way we were looking at things were basically wanting to stay over 4,300 here to keep the bullish momentum intact in this market. In fact, sort of welcomed. I mean, I would have preferred, to be quite honest, a little more weakness, a little more consolidation, a little more of a shakeout here, but we didn't get it. I mean, we came just, again, ripping right back, closed at new highs for the year. If we go to the daily chart, here's what that looked like. We did have a very nice textbook. I mean, we almost got down to this 4,300 zone. We did get about 5 or so days of consolidation, 2.5% off of the highs here made earlier in the month. And now here we go, kind of springboarding higher. We saw this gap up on Friday and then closing and taking out at new trend highs. So when we look at this roadmap here, again, we seem to be now very much on march and marching towards the old January, February highs here from 2022. That comes in around 4,600. We talked about this level last week. It's about 3.5% above where we currently are. We put in a 2.5% up week this week. So, in a week's time, we could be all the way back up here. The Nasdaq has already tested this sort of zone for the NDX chart, but S&P 500 seems like it's got some good room up here to just move. It doesn't have a lot of previous supply, or at least certainly not the way I look at markets. Doesn't seem like there's a lot of congestion in here between where we are now and 4,600. So we'll see if it can get up there. Nothing generally works in a straight line, but that's sort of my next upside kind of target or level I would reassess at this point. But for now, going forward, if you're still participating in this market here, 4,300 still the zone that I'm using. I mean, you can use last week's lows, which would be around 4,340, 4,330, but generally speaking, that's kind of the area you would like to see this market stay above now as we march into July. If we take a look here at the Nasdaq, let's see if I can flip this chart. There we go. If we take a look at the Nasdaq here, you can see the NDX right back up, and again bouncing after just a week of pulling back, but coming right back into this 15.2 area, which again is the January, February kind of resistance where the market sort of double topped on that initial leg down. It was all the way down around 13.7, had a nice 8% bounce up to about 15.2. It failed. Then it came ripping right back into 15.2. It failed. And then it ultimately rolled over for that big treacherous leg down throughout 2022. Well, here we are now. Price has memory, a lot of sellers, a lot of people at this top here getting stuck and just, a pretty influential inflection point for markets. And now we are testing it again for the second time here in this month. So we'll see how the Nasdaq follows through next week with this 15.2 level. Can it take it out? Can it break out? Does this turn into a continuation pattern? And certainly, if we start getting above there, you're right back. I mean, your next big level, of course, now is just going to be all-time highs up here around 16.5, 16.6. And again, it's not that we would have to get there in a straight line, but we'd be about 9% from all-time highs, which is where we currently are right now for the Nasdaq 100. Very, very impressive. Trend continues, accelerating to the upside. There's a bid in this market. Every shallow, kind of sell-off here is just getting scooped up and resolving higher. So that is the sentiment right now, and we'll see, if that can certainly continue next week. Russell 2000, I think this would probably be the most interesting of the indices this week. And if we look at the weekly chart, you can see again 3.71%. We were down 2.9% last week, and if you recall, we didn't really like the way we kind of came, hitting back down and kind of gapping down and slamming back down into the breakout zone around 178. We did want to see this level objectively hold here. That's kind of the point of control here on the intermediate term for Russell 2000. And again, we almost got right to it and it held. That magic bid appeared, lighter volume, but here we are right back up towards highs. We're still in a bigger sideways range, broader, more broadly speaking, going back a full year. But it is nice to see that we are trying to put in a higher low here, trying to take out these prior highs. And I think, again, over 180, holding above 180 is at least a good sign, good start for the Russell 2000. If we put on a weekly chart here, again, there's lots of congestion in here. It's not really breaking out of anything substantial until it starts getting over 197, 200. So we're still a ways away from that at this time. I did want to talk about the Dow Jones. So this is one of the more interesting kind of charts here. So if you take a look at the Dow, you have to go all the way back to October of 2022. This was the first of the big indices here to really lead us out from the depth of the bear market. I mean, this was one of the first indices that turned over here in that fourth quarter, and it really had just a very impressive run up of about 20% all the way up to this 345 level going into the end of the year, and then it just went totally silent. It has been completely sideways, chopping around, and relatively inactive here after such a big move up. So it's been effectively consolidating that big run up from the fourth quarter of 2022, but now it's starting to look like it's ready to resume this climb, and it's got a big zone in here, that it's been carving out and hitting its head against for really all of this year. And it has memory going back to, the spot here back in August, more or less. You've got some supply in here and some failures back here in mid 2022 as well. So there's a lot of price memory over here. And it seems like if the Dow can start getting some momentum over 345, 346 and start making new highs, there's a lot of fuel in this tank. And if we see some rotation, maybe outside of technology into some of the spillover of industrials, materials, energy, real estate, some of the things that are coming alive this week, then you could see a pretty nice little rotation trade there. So something to keep on the radar. Dow Jones starting to look good. And if it can start to get or continue to get some more momentum, it looks great over that 346 level. So that's what I'd be paying attention to. I do want to run through a couple of the other big ETFs, gold, for instance. So gold was relatively flat this week, but take a look at the big tail that it drove off of these lows. So there were definitely some buyers in here as we started to get a sub kind of 176, 177. And so that's nice to see. Got a bit of a hammer here. Maybe we could call that, at least an attempt here at trying to put in a little bit of a low for GLD. We'll see if we can find some follow through next week. We've been in this consolidation mode since the start of May, and we'll see if gold can finally get that follow through breakout and break of this downtrend line that we've seen over the past couple of months. Now, if we take a look at oil I think is also, getting pretty tight and sideways and interesting here. It's broader, more broadly in this down channel, this consolidation from the highs it made back in May of 2022, but more, immediate. It's been in this very kind of choppy sideways range here, just a lot of overlap these past 2 months, trading in between, call it $61 and $65. And it's going to be very interesting to see how this ends up resolving itself. It's still in the middle of the range right now, but there's plenty of fuel that's been kind of pent up in here. So oil, I think, is going to be pretty interesting one to watch in this consolidation as it finally, or when it finally starts to emerge. And then if we look at those treasury yields, so this was some of the volatility we saw this week. So if we look at IEF, for instance, or let's go to the actual yields, just because sometimes that's a little bit cleaner. So when we look here at the CBOE 10-year treasury yield, so this is charting, this is looking back over this past year. About a year or so. And if we zoom in a little bit further, again, you can see just how tight we had gone here over the past month or so. And now you can see Thursday's session was really trying to be this breakout expansion, maybe kind of a rotation into a higher, regime here, a markup phase back up into the old highs. And we ended up pausing and kind of reversing a bit, just throwing a little bit of cold water on this on Friday. So this is what I'm a bit concerned about if I want to try and make a bear case for this market, or something that's at least going to pump the brakes, maybe throw some cold water on this equity market rally, it would be treasury yields. It would be watching this TNX. If it starts to, really get some legs here and momentum and starts squeezing up into, say the old 4% level, that I think would be enough to put some pressure on the Nasdaq 100. Not here yet. It's not fully happening yet, but starting to get a little bit volatile here. Meanwhile, we do have the MOVE index though, which really isn't, ramping up to the upside. So, I mean, you've got kind of this, optimistic sort of backdrop here in terms of treasury vol. And so the fact that this is kind of on this downward slope, you would think would be, bode well for, bond markets just generally speaking, but we're still waiting to see how that shakes out. But I would definitely keep an eye on the 10-year note going into July here as a potential wrinkle in this bull case. So I think that was everything I wanted to mention in terms of major assets. I did want to show a couple of other things here. So I wanted to bring up this layout here, and I wanted to look at some of our strongest stocks that are presenting themselves. So this is a strongest and weakest layout here, and it's got sorted on the left-hand list here. These are the sectors that were best performance. So we already went through these, but real estate was at the top of the list. And I want to show actually energy. So it's the number 2 is basically up, 5%, the same. But I wanted to look at some of these energy stocks. So if we look at the best performing energy stocks this week, TRGP, this is the first one. And I don't have a good handle on these particular companies and their just general outlook. I'm really looking at this from a price and volume perspective only, but you can see that, this has been moving sideways for quite some time. We finally got an uptick in volume, getting a big expansion in range. EOG, again, sideways for a long time, trying to get a breakout of some of this recent trend. OKE, big expansion up, going sideways for a while. HAL, all of these were very strong performers. All of these are in the midst of some, broader consolidation patterns. And so, again, when we think about perhaps the Dow Jones and some of these industrials and energies and material stocks, and if you're thinking about a rotation trade, and in that Dow Jones, again, just looking at this chart here that we said looks kind of ripe for a breakout, and you start looking at some of these other areas of the market that haven't really fully participated the first half of this year, it's something to keep an eye on here as we go into the second half. If you do see this rotation, it is notable. There is a lot of sideways pent-up consolidation in a lot of this area of the market, and I think it's just an interesting potential, kind of rotation trade as we go into July. So keep it on the radar. Not fully sold on that thesis yet, but it's something that is at least kind of making itself known with some of the price action that we saw this week. Last thing I wanted to look at was Apple. Apple here, again, making a lot of headlines going into the end of the week here, end of the month. 3 trillion market cap. Congratulations, Apple, and to all the shareholders there. First company to hit 3 trillion. And you can see it started with kind of continuing here with a gap up. I don't know if I love this action here. I mean, if I was a trader, this gets me a little bit nervous in the sense of you've got this kind of protracted uptrend, and now you're starting to get a gap up and push here on big volume. Don't know if this is the start of some type of blow off top. Again, I would not be fading Apple here. I have no shorts. I would not want to short it. I'm just keeping an open mind that, usually when you get this kind of, explosive kind of move here after an already protracted move, you just have to just be a little bit cautious, know where you came from, and know that the stock has been up quite a bit. So still could be a great trade here. And especially if we do blow off, I mean, these are some of the best trades to participate in on the long side if you're a trader, but just be careful holding the bag a little bit too long if that does play out. I would love to see more consolidation take place here. This has just been an absolute march higher, and so again, congrats to the long holders, but something to just keep an open mind about. So that, I think, covers all my notes for this week. I hope everybody has a great and safe 4th of July holiday out there in the United States. We got markets closed day and a half, I believe, next week. So enjoy the time away from the screens. As always, I invite you to leave your comments below. What are you looking at this weekend? What are you thinking about this market? Are there any bears left? Can anyone make a good bear case right now on why we want to be short stocks? I'd love to hear it below. It seems like there are very few now that we have climbed so high in such a straight line. So leave me your thoughts below. And again, wish you great 4th of July holiday. We'll see you back here next week. Take care.